Welcome to the Rick Helps Real Estate Show. We're trying to make sense of this crazy Arizona market, and I'm seeing a little bit of a slowdown this week. Now, I think that's probably to be expected in our market because it's spring break. People go to Mexico, they go to San Diego, they go to Flagstaff. They're just not out looking for homes, although some of them have listed their homes. And I'm going to show you on my little 7-day moving average chart here. I'm going to move my mug over to the left here. See that line that went up right here? This is active listings, new listings. So I'm taking new listings and back on market, adding those two together. I'm subtracting canceled listings and expireds. Now, expireds always spike the first of the month. Then over the course of a week or two, it whittles down, and that's what's happened. So we had, instead of 600 expired listings, now we got about 200. So that makes that line go up a little bit. What's a little bit surprising is that the new contracts have taken a dip. So now we have a gap of about 500 homes between new listings and new contracts. That will show up in our inventory number on Monday. Now, will this continue? Well, it depends. Depends on the impact of spring break, which is a couple weeks here. So I expect the next couple weeks to be kind of slow when it comes to contracts. I don't know what to expect when it comes to new listings. Now, you've heard me talk a lot about I still think there's a possibility of seeing a huge jump in expired listings on April 1st because I think there's a lot of people that said, let's see if I can sell this first quarter, and if I can't, I'll just let the listing expire. So they signed listing agreements the 1st of January to expire on March 31st. I don't have anything concrete to show you. It's just my gut, and I think that's where we're headed. But what we're seeing here is also very interesting in that we're seeing a lot of price changes, a lot of price reductions. They continue to go up. People listed in January said, whoops, January didn't work, better pull that back. We started seeing that. February, still didn't see a lot of results. I need to pull that back again. And they're continuing to lower their prices. And you can see active listings are continuing to climb. But the 12-month moving average on sales price per square foot is not going down. It's still climbing. Now, what price point is that climbing in? That's important. Let's pull out what I'm going to call luxury here and see what's going on. Anything below 800,000, it's starting to flatten. If I take out 800,000, I'm seeing that it flattens even more. Below 600,000, we are seeing it flat as well. What that tells you is that the luxury market is still strong. But watch that as well, because the stock market has been absolutely slaughtered the past couple of weeks, and stock market doesn't do well, luxury market doesn't do well. So I don't expect a big slowdown there. I expect to see some changes. When we look at the Cromford Market Index here on this table, it shows you that Chandler is still 142.8, Scottsdale 125.4. Anything over 110 is considered very favorable for sellers. It just means that there's less inventory and more buying activity. Right now, you're seeing that Chandler slid by 6% versus the week before, so it's going in the other direction. Kind of like that 7-day moving average that I just showed you. If that gap shows, there'll be more red numbers on this chart next week. Maricopa, Buckeye, Surprise, and Queen Creek are down at the bottom, below 78, and that means that there is more inventory available based on the number of contracts that are being written. It means it's a little challenging for sellers to move their home. It's not the end of the world. You can still sell them, just find your right price. Right now, we're seeing the average list price per square foot in anything under $1 million is coming down significantly. What by significantly, I mean 257 to, says here, let me straighten this out, 257. It's not squaring up right. This thing's just not giving me the right number there, but you can just see simply on the chart, but it went down. If I filter in everything else, including luxury, we're not quite seeing that. We saw a little bit there coming down. So the average list price, sellers have recognized in January and February that it didn't play well in Peoria, so now we need to make some moves on our pricing. And that's going into what we normally see as kind of a busy spring market, but it doesn't look like we're going to see a busy spring market. And this is probably still why we did see a decrease in mortgage rates over the past week or 2 weeks, down from 7.02 to 6.79. But I don't think it's enough for buyers to go, okay, I'm back in, because prices are still too high. Listings canceled per month have not jumped. They're kind of staying where they've been. So we're not seeing a lot of people canceling and saying, well, I'm out. Now, expireds, you can see, here's my point. December jumps up, December. Right now, not a lot going on. I don't have any empirical data to show you that my theory on what's going to happen April 1st is going to see a huge spike. It's just a gut. And if I'm wrong, you can look forward to that video saying, I'm eating crow, I'm wrong. But I think I'm going to see that. Now, what we see here is months of supply spiked up to 5. But you can see there's quite the gap between last year and this year, which simply means we have, if no other listings came on the market right now, it would take us 5 months to sell, 4.2 months to sell our existing inventory. It's just a measurement of supply and demand. Between 4 and 6 months is considered normal. You can't even really use the word normal in real estate anymore right now. We don't know. There's seller's market, there's a balanced market, and there is a buyer's market. And for the past few years, there should have been a bucket called weird market. We're heading into a type of year, the time of year where normally we start to see an increase in sales and an increase in activity. The bond market is signaling across the board that they're getting a little more optimistic that we're going to see some rate reductions going into the rest of the year, despite what you're seeing on the news where Chairman Powell says, got to see more data, got to wait and see what this new president's going to do. The bond market is kind of washing that to the side based on the numbers I'm seeing, saying, well, he can say what he wants, but we think, this is the bond market, we don't think tariffs are going to have the impact that people are saying in the media. We don't think things are going to really cause the central bank to tighten or to delay any loosening. So the bond market is more optimistic than the stock market and the Fed chairman at the moment. Will that stick? Sometimes it does. Are we going to have a recession? It's possible. It's been possible for the past 3 years. What does a recession mean? Well, it means a couple quarters of negative GDP growth. Sometimes you have a recession, you don't even feel it. So we don't know. There's a lot of unknowns. And when you have a lot of unknowns and you have an interest rate above 6.5, sales activity will stay slow. In the simplest of terms, that's where we are in the Phoenix real estate market. Now, do me a favor, use the link down below and register for just sign up for my newsletter. You get it every Monday morning at 7 o'clock. I don't spam you. That's all you're going to get. You're going to see the Cromford Market Index commentary, mortgage rate update, commentary from them, and then my opinion down on the bottom. And what could possibly be worth more than that? Hope everybody has a great Monday. Take on the day. We'll see you the rest of the week. Take care.